Today I'm talking to Owen Colgrove. He is the co-founder of Algofi, a decentralized lending protocol, and now a DEX on the Algorand blockchain. If you don't know about Algofi, it's time, all right? Especially right now. But before that, this episode of the ReCoop is brought to you by Headline Inc. Headline is building essential Algorand ecosystem tools like Pipeline UI, ALGO Cloud, ALGO Glyph, ALGO Swap, ALGO Pay, and much, much more, including the proof of stake social media network Forum. If you want to learn more about Headline, follow them on Twitter at headline_crypto. All right, everybody. Without further ado, here is my interview with Owen Colgrove. Hey, everybody. Welcome to the ReCoop. I'm Cooper Daniels, and I'm a guy that knows a little about a lot. And today I am here with a guy that knows a lot about a lot. His name is Owen Colgrove. He's the co-founder of Algofi. What's up, Owen?
Hey, Cooper. Thanks for the generous introduction. I don't know that I necessarily know a lot about a lot. Maybe a lot about a little.
Yeah. A little, yeah. Okay, so you know a lot about a little. I know a little about a lot. So
Exactly.
we're going to be a great combo on a couple of things.
I think so.
So
yeah, exactly.
hopefully I can ask good questions about a lending protocol, and I don't have any good questions about being a particle physicist, but I'm going to ask you about that. All right. So, okay, before we jump into Algofi, you guys had a big announcement this week. You're a lending protocol that also is now a DEX. We met last week at ETH Denver. Briefly, it was cool meeting you. And how about for everybody else, can you just introduce yourself a little bit? Tell us about your background and how you came to Algorand and Algofi.
Sure. First, ETH Denver was a blast. It was great meeting you too. Really bit of a whirlwind day for us because we kind of flew in and flew out in the course of 24 hours.
Oh, did you really?
Yeah, we just wanted to be there to be on the panel and raise a bit of awareness for the upcoming DEX launch we had. And then we had to go back and, really haul to get the app fully ready to go. And I think, we'll get into that. I think we did a good job there. We're really happy with that result. And, to dive in a bit into my background, as you pointed out, I first started off as an academic. I did my PhD in particle physics, and I always wanted to be a physicist for like 10 years and just worked aggressively towards it. And at the end of that kind of road, I kind of felt like, well, it was interesting. I really liked doing it, but I think there's a lot of opportunity in other places, and it's really kind of exciting me to go into finance. I really like markets. I think that it's just super interesting as well. And I kind of just switched paths and went and took a job as a quant, basically. I was working at Citadel. It's a well-known hedge fund, and I was designing algorithmic trading strategies there. So I spent 2 years there working side by side with John, actually. He was really in the trenches in the market trading these strategies. So he had a little bit of a different context, and together we worked really closely where I would kind of go do research, look at the data, think about, hey, what's going on? What are the trends in the market? What can we take advantage of? And then John would be in the market, like watching it live, executing on these strategies. So we worked really closely. I think it was a really fast-paced, exciting environment. But at the end of the day, I was more excited to maybe go get into crypto. Like watching DeFi take off got me really, really excited and made me feel like there really is a new financial system being built. And I'd much rather go work there than within our traditional financial system. Yeah. And so we ended up leaving our jobs in April of 2020. And we kind of went together and started building Algofi here. And initially, Algofi was not Algofi. It was us exploring and thinking about, hey, like, what does the space really need to grow? And I think our first kind of thought there was it needs more users, right? Like right now, the space is pretty small. It's pretty niche in the grand scheme of things. And there's also a lot of friction. There's a lot of entry barriers. It's hard for people to get into the space. And so our first kind of key focus was like, how do you make it easy to get into DeFi? How do you remove all of that friction? How do you start onboarding millions of users? And as we went down that tunnel, down that path, we kind of realized it's really hard because you're actually limited by the technology today. If you look at Ethereum, it's a very high touch network. It's actually difficult to kind of send transactions to Ethereum and to automate that and remove the complexity seemed impossible. And so we kind of learned quickly on like, look, we're not really going to be able to do that idea. And that kind of tells us that there's probably a really big opportunity still in figuring out how to make DeFi way simpler, way easier so that it can scale more. And the key there is to go somewhere besides Ethereum and build on another blockchain. And so this insight has been like, it's been realized in the sense that many blockchains are now competing aggressively for Ethereum's market share. And, you see Solana, you see Avalanche, you see Algorand, of course, and these other incumbents all fighting over the market share. And, that is kind of coming to fruition. And I think our thought there was, when we're deciding where to go, it was going to be who's really building the best technology in the long run, and like where is the opportunity, not today, but on the time scale from now to 5 years. Like where do we think we can start growing now, but never run into scaling issues? Really have the best tech supporting the protocol, and where do we think that will happen? And I think we kind of did our research and settled on Algorand being a really, really compelling place to come build. And that's what led to us building the lending market, actually. So it was just this line of events and reasoning and thought process where we felt like we had identified a really strong market opportunity and something that just made a lot of sense and could potentially build into a bigger vision. And so we wanted to start there.
So, well, just to go back real quick. So you said you worked at Citadel, but you got out before they got the bad name, right? This was April 2020. So it was 2021 where Citadel David Portnoy.
I have to pause you. I misspoke. We'll have to cut that, I guess. I was going to say April 2021.
Oh, yeah. Okay.
No, I was there.
So you actually... All right, so April 2021. All right, so then no, you didn't. So in April 2021, were you kind of like, all right, we don't want to be like, you're kind of like traditional finance kind of sucks a little bit here. This isn't where it's at for us, and now let's get out of here and start build, and let's see how we can bring the ease and the lack of friction of traditional finance, or I mean, I guess there's not a lack of friction, but the ease of it, the user friendliness of traditional finance, and bring that to DeFi.
Yeah, I think for me, I was never that keen to work in the traditional financial markets. As much as I loved markets, I think I was always a bit torn, because ethically, I don't know how much I really support the current financial system, which is a bit of a weird thing to say. But for me, like with what happened in 2008 and with the general policies that have been carried on, it's hard for me to really support what they're doing. But on the other hand, like I did find markets incredibly fascinating. So I really wanted to get into that data and look at it. And I think, working in that environment for a few years, I kind of realized this is not the place I want to be the rest of my life. I don't have the passion to like do this day in, day out. And, in some ways it was easier than being a particle physicist. In other ways it was harder, but it just didn't seem like it was worth the effort that was required, in the sense that I didn't love what I was doing, and why work yourself to death doing something you don't love? It just didn't make sense to me. So that was ultimately like the strongest forcing function for me to leave traditional finance.
Got it. And you said you were a quant. Do you want to humor me and tell me exactly what that is? Or not exactly, but like a quick version of what that is?
Yeah, well, a quant is the typical role that a particle physicist ends up in if they're going to come into
finance.
And exactly. We're people like people of that profile. They're very analytical and really like to get into the details of things. And for me, I've always loved like consuming data, analyzing it, thinking about it. That's been my strong suit. That's what I did a lot of in my PhD. And so, what I was doing was building stuff that was very systematic. It wasn't really reliant on human discretion. And it was kind of like consuming various signals and combining them into something that, like as a machine, made informed decisions about the market. And so it's very different from kind of the old school financial model where, you come in, you read some articles, you think about the market, and you take a view on what you think is going to happen.
Right. Okay. So you freed yourself from that. You looked at the crypto landscape and you zoned in on the best tech, Algorand. You were at ETH Denver. Are you tracking this push towards EVM and AVM interoperability? And do you see where Algorand is kind of going with that? What are your thoughts on just Algorand before I know we're going to talk about Algofi and everything, but just on your thoughts about Algorand moving towards this interoperable future and how they kind of take market share from Ethereum, basically.
Yeah. I think it's an interesting angle. Some blockchains have managed to grow their user base without focusing on EVM. And I think that's one approach that has worked for some, but it's definitely going to be to Algorand's advantage to be EVM compatible. That's going to reduce friction for new developers to onboard. So I think it's really smart in the sense that it's going to give them the chance to grab a wide market share and bring them to the best tech. So, I'm excited to see that, and I'm curious to see how people are going to execute on that and like what the various proposals are going to be, because I think it's also one of these things that's easier said than done. Algorand has its own native language, and so finding a way to make that a seamless experience for Solidity developers will be, I think, something that's interesting. But money well spent and a really smart long-term goal to get that EVM compatibility, and I think it could lead to some really strong growth of the ecosystem.
That's cool. And then also with state proofs, isn't state proofs essentially just a workaround from a workaround to compatibility in general? Is that yeah?
I guess that's one way you could look at it. My general thought about state proofs is they're really, really good for solving the bridging problem, which we've seen a lot lately is a hard problem to solve and incredibly important to get right. With the hack of Wormhole, that kind of showed just how much is on the line with the various, multi-chain bridge solutions. And so what state proofs allow is a way that all of the blockchains, if they adopted this standard, could communicate with each other seamlessly and really make that bridging process low friction and easy and a lot lower risk. But, again, with state proofs, it's one of those things where kind of everyone has to be on board with it for it to really have that power. But I think we're going to see in the coming months and years that people start to realize it's a very compelling solution. And I think that it's going to be, it's going to put Algorand in a unique situation to have developed that technology.
So then that kind of transitions us to the whole kind of mission of Algofi is bridging traditional finance to decentralized finance, and state proofs and that kind of bridging interoperability. You can't have Bank of America on Solana and Chase on Algorand and not have easy, quick ways for them to communicate with each other. So I mean, that's kind of the link here. But okay, so you guys started out with this idea of traditional finance, a lending protocol. You just launched the DEX. I remember when you first launched, there was talks of even traditional tools like credit cards and savings accounts and stuff. Is that still something that you guys are working towards?
I think the long-term vision is definitely there to build out stuff like that. The nature of a space like crypto, though, in my mindset has always been that you have to win early because there's so much volatility and uncertainty. You have to come in and make a big victory early on in order to fund that kind of more speculative long-term work. And so, right now the primary use case is really DeFi. And first of all, I think DeFi is really cool. So I'm happy to take some time and really build that stuff up. And I think we had initially decided we're going to build this one kind of protocol in DeFi and then start building other more traditional on-ramping systems into it and kind of focus on that connectivity there. But then as we got more into the weeds, we kind of felt like there's an interesting opportunity to really build a one-stop shop for DeFi and kind of roll up all that functionality in one place. Because once you kind of have done the work to build a lending market, building a DEX becomes a lot easier because you have that familiarity with the code. You have that understanding of how to roll out all of these different infrastructural needs you need to support the web app and these types of things. So I think we kind of realized, why don't we get a little bit more activity in the DeFi space here in Algorand before we start thinking about other things? And the way we could do that, the way we could drive that, is to really aggressively push the boundary of what exists on Algorand today. And so, that's where we got the idea. Let's get the DEX online and then also keep thinking about other things we can layer in on top of that.
Right. So, okay. So exactly right now, I mean, because everybody that's watching right now, this is a really good time for you to become familiar with Algofi. I mean, there's a lot of rewards on Algofi right now. There's a huge incentive to Google Algofi and then go figure out how to use it. And so, So do that. I just, between me and you. But so, okay. So tell us exactly what you can do on Algofi currently. I know the DEX went and the DEX launched really kind of seamlessly, and you guys have incorporated these rewards. You can earn additional APY or APR in Algo. But so what exactly can we do on Algofi right now?
Yeah, let's start at a low level first and just kind of really discuss what's going on there. And I'm really excited to talk about it because it's something that's been we've just been working day and night on, and we're really excited to see it all coming together right now. Mm-hmm. But basically, the first thing we built was a lending market, and so that allows you to take, say, your algo, deposit it into the protocol, and then use that as collateral to borrow other assets against it. So, for instance, you could borrow USDC, you could borrow a native stable coin we developed called Stable, or you could even borrow GoETH and GoBTC, which are wrapped versions of Bitcoin and Ethereum. So there's a lot of utility just right there in terms of what it enables. And this is a decentralized lending market. It exists on the blockchain. It's mediated through smart contracts. So it's an interesting innovation that Algorand didn't have before we launched in December. And it kind of enables a lot more DeFi activity. Right. Now, with the launch of the rewards, though, it starts to get a lot more interesting because basically what we've done is we've written into the code of the smart contract algorithmic logic that enables people who use it to earn rewards once that program has been funded. And so, through the Algorand Foundation with their Aeneas liquidity program, we were able to get 2 million algos to distribute over 3 months. And so we are distributing those, the majority of those through the lending market. And so people who come and they deposit money or they borrow money, they're getting paid to do so basically today. So, the rates are pretty good, right? If you come and deposit algos, as of last night, it was 6.3% APR that you're getting paid through the rewards. And then you're also getting the base interest rate that you make from, what other borrowers are paying to borrow it. And then you get the fact that you can do this thing called rehypothecation, which is a fancy word for saying you can put collateral in, you can borrow stuff against it, and you can resupply the stuff you borrowed. So, you're getting paid to put the algos in, you're getting paid to borrow them, and then you can put the ones you borrowed back in and borrow more. There's all kinds of tricks you can do in the lending market to even increase that APY further and higher.
That's crazy. And so, and I don't think I've gone far enough. I mean, I personally think I should be borrowing more. I don't have a lot of, I don't have a lot of history with leverage, but this seems like if I'm, if I have a bunch of USDC on Algofi, there's really no risk than for me to play around here. So yeah, because you can literally borrow, you can get paid to borrow from Algofi currently, basically.
Yeah, it's even more dramatic for the stable coins because they're rewarded more. So right now it's twice as much in terms of rewards. So if you borrow our native stable coin Stable, you pay 4% interest to borrow it, but you're earning in algos 13%, right? So you're earning 9% net interest to borrow, which is pretty cool. This is kind of the tip of the iceberg in terms of this whole DeFi thing that you can do because, there's other things we've enabled which allow you to start getting yield through even more interesting ways. So we can kind of go down that stack because now that we have a DEX, right? The DEX, the way that works, it facilitates trading automatically, and people who provide liquidity that is used in that automatic trading are earning interest, right? So you can actually, if you wanted to, you could say, I'm going to take half my algos, put them into Algofi, borrow Stable against it, and then take some of my remaining algos and go put them into the DEX as liquidity. So now I'm going to get paid on people who are, paid for trades against Algo and Stable. As people come and trade those back and forth, I'm earning trading fees. And, you're getting paid for the Stable you borrow to do that and the algos you put in to borrow that Stable. So, you're earning yield there. You're earning yield from the trading fees. And then we have a new thing in the Algofi protocol, like in the general umbrella one-stop shop we have called farming, which lets you take those LP tokens you get. They're called liquidity provider tokens, which are a representation of that money you put into the DEX. And you can go deposit those for further rewards. So that's kind of like, if you're really going down the stack, you can do all these complicated things and really get your APY higher and higher and higher.
Right. And then if there are things like, are you familiar with Guard? Guard or, anything else like that. If this in the future, you're able to do something like that with your governance stake. And then we can
Yes.
participate in things like Algofi with our governance stake. There's just potential to, if you know what you're doing here, for it to be a very lucrative opportunity to provide liquidity. And we're all here very early as well. The reason why you're able to provide these rewards is because Algorand's saying, hey guys, come over, and they're trusting guys like you to do it right. And seems pretty good.
Exactly.
Yeah.
We were all kind
Okay.
of winning, I think. Yeah.
Yeah, it feels like we're all winning here. So, okay, tell me a little bit. So you have Stable, which is a algorithmically backed stable coin. So how exactly does that work? Have I noticed, am I right, that Stable is sitting around 95 cents rather than a full dollar?
Well, it was trading there before. So basically it's trading at $1 today.
Okay.
And this is what it's trading on Tinyman, right? The price on Tinyman's DEX. And there's kind of like some supply and demand dynamics that are driving that, because Stable is softly pegged. Like there's not a hard arbitrage mechanism today which locks its price to $1, because the only way we could do that is if, for instance, we had our governance token live, which we need governance to release, and then we use that as a treasury backstop, say, to keep it at $1. So rather, we've let the open market price it. And the thing is, here's why it wasn't trading at $1. People go and borrow Stable, right? They trade that Stable into ALGO, and then they now have leverage. And in order for Stable to stay at $1, someone has to come eventually and buy that Stable back that they had traded. Now, we built incentives to get people to do this, but there wasn't that much liquidity on Tinyman's DEX. And so when you have a constant product market maker, which is what Tinyman is, if someone comes in and they do a decent bit of trading, the price starts to slide significantly. And so there isn't really a large enough source of liquidity to hold over the differential supply and demand until someone goes to repay back that borrow. So, one thing we've been working on building is something called a stable swap, and we're planning on releasing that in mid-March. And this exists on other blockchains. So for instance, on Ethereum, it's called Curve. On Solana, it's called Saber. It's a unique protocol in itself. And it's a different function for determining how the liquidity is distributed. It's a different kind of DEX. And it's built solely for the scenario where you know roughly what the price of two things should be. And so in the case of Stable, we're not gonna say, hey, it's exactly $1. It's more like, hey, it should be about $1. And so the DEX takes this into account in the mathematics that determine how liquidity gets distributed. And in that way, it makes it more stably trading at $1, right? Because it makes so the price moves less for early trades. And so what this does is it kind of amplifies the effective liquidity that people put out there to facilitate trading. And you also, I guess you asked me, how does Stable work? So taking a step back and getting into like, how does this all work? This is something that exists on the Ethereum blockchain with the name DAI. And the protocol called MakerDAO is the one that, facilitates the creation of DAI. And generally speaking, what Stable is it's a similar object, which is an over-collateralized stablecoin. And so what that means is if someone wants to get Stable, they have to come to the Algofi protocol. They have to deposit more than $1 worth of collateral and maintain that collateral. And in exchange, they can borrow Stable against it, which the protocol deems is worth $1, basically. And you have to tie up a sufficient amount of collateral to do that. And now suppose I'm failing my end of the bargain and I let my collateral fall to lower values than what it should be. Then someone can come in, they can pay back the Stable I borrowed and take my collateral from me at a bonus, even at an incentivized rate. So it's weekly pegged to $1, but there's strong economic factors that drive it to a price of $1. And so that's generally how it works.
Okay. And, so that's how the algorithm works, is that in order for anybody to take Stable, they have to have more than the value of the Stable they're taking. So it's always over collateralized. It's always over. Yeah. So that makes it also decentralized and probably more appealing to regulators as well. Correct. Because that's a completely transparent. Transparent. It's not like Tether where nobody really knows what's behind, or, okay, it's a bunch of commercial paper or whatever. We trust you, I guess. Yeah. That seems more likely to get regulators on it than something like this.
I think in general, like DeFi is so much better, so much more transparent. So you had this recent issue with BlockFi where they were fined $100 million from the SEC. And, what they were doing was a lot of stuff that's somewhat shady to do with retail money. but there wasn't really regulation or accountability when they were doing it. So, whether or not they were doing something right or wrong, the thing is, it wasn't super clear what these companies could or could not do. And they were definitely taking some liberties in some instances. And so the result in BlockFi's case was a large fine from the SEC. But in DeFi, it's very hard for something like this to happen if it's truly like an autonomous smart contract protocol, because it's like, this is exactly what the protocol does. This is exactly how you earn the interest. This is exactly how you pay interest. There's not really the room for anything strange or unsavory to happen there. And similarly with the stablecoin, you know exactly how it's being issued, and it's just up to you whether or not you believe that it makes sense, like economically and mathematically, like what's being done there.
Yeah. And your protocol is decentralized. There's no KYC. There's none of that, right? Yeah.
Yeah. It's just smart contracts on the blockchain that we wrote. And like, what Algofi is we're just a front end. It's like, if you think about what Algofi is today, we put the smart contracts on the blockchain, and at this point they're just there. There's some things that, various parameters that might get tweaked early on to protect the protocol. Like there were caps on the borrow and supply just to make sure that, nothing happened too fast. And we made sure things were working as expected early on. But now it's just smart contracts on the blockchain that anyone can use. And then the Algofi website is really just like an interface that makes it easy for people to use these smart contracts that were written.
Right. I noticed last night I went to borrow stable and it had maxed out. Is that something that, so people started to realize, okay, this is a good idea. So is it still maxed out? Are you going to lift that cap at any point, or, you just have to wait for, people to kind of,
it's at 10 million now. We doubled the cap. I think in general, we're just going to take the cap off. This is the last market that had any caps. And the reason it had one is just with the over collateralized stablecoin, you want to make sure that the liquidity that's being taken out, like the stablecoin that's being borrowed, is roughly going to where you want it to go. You want the majority of it to go into liquidity pools that will facilitate trading, because this will make the price more stable, right? So if a lot of the people who are borrowing are like, okay, I'm going to go use this to make trading fees from the DEX and to facilitate trading, that's kind of a productive use of stable. And we just want to make sure that there was sufficient liquidity, because if everyone was just borrowing it to get leverage trading, that would just smash the price down, lower. And, the thing is, that's actually not a problem for stable. It's just optically something that, like, we don't want the protocol to look like it's doing a bad job. So we have to be cognizant of like the early user behavior. Since I think, there's a lot of really complicated things going on here that we're discussing, like mathematically, economically, game theory, all these different elements. And so I think it's really hard for everyone to keep track of all of that. So like when you're, initially launching one of these protocols, you just make some choices that will maybe try to protect it from like things that could potentially be unwanted.
Yeah. But, in the simplest form here, like if you have a bunch of Bitcoin that you're not going to sell it. You're long and it's just sitting there. There's worse ideas than bringing it over to Algorand right now and, minting it on AlgoMint, turning it into GoBTC and putting it on Algofi. I mean, A, because of the rewards, there's incentive to do that. And then, B, then you can use it as collateral and earn all this APY that we talked about. And so how long do these rewards last? You said 3 months. Has that 3 months already started? Or is it until they run out? I mean, how do these like Algorand rewards play out?
So first of all, definitely agree with you. If you have BTC or ETH and you're just sitting around with that, like, bridge it over. I think the team at AlgoMint's very competent. They built a great bridge. It's been audited. It's secure. For instance, Algofi has been audited. It's like very secure. We're really, really uptight about the security and like re-audited ourselves many times before we launched it. Because the biggest risk in this space is always hacks. So I think like that's what a consumer needs to really be cognizant of and think about carefully anytime they're transacting with any of these things. It's like, what's the risk that there's a mistake, an error, or something like that. But then sorry for the detour. I just wanted to kind of also double click on that idea because I think it was a good one. And then in terms of the rewards program itself, it's running for the next 3 months. It's now just a couple days in, right? We just kicked it off.
Right.
It's all algorithmic, as we were kind of saying before. It's the protocol is handling the distribution of the rewards. So you can go look at what the rates are today, and you can say, hey, if this much more money comes in, this is what the rates would be then. And so you can kind of get a feel for what things would look like under different scenarios. And yeah, I think after those 3 months run out, the question then becomes, have we done a good enough job in terms of like getting new money into the ecosystem, spurring activity for it to be worth the foundation's program to like, continue it? And we're kind of hoping that that will be the case. We think that we're going to see, like, we're already like overwhelmed, I would say, with the response from the community. People are just like super thrilled with what we've released, with the rewards, with the DEX, with the general like multitude of things they can do now and the ways they can earn money. And I think we're going to see the ecosystem really start to grow through this program. So I think I'm hoping it'll likely continue, because I think we're going to see that it was well worth it.
So if I'm somebody, not that you guys are in competition at all, or I don't know if you do feel like you're in competition or not, it's not my interest is the point, is that, so if I'm choosing between making a swap on Tinyman and Algofi, is there any reason other than I have a lot of liquidity on Algofi and I'm already there that I should use your DEX? Or is there any difference in using either one at this point?
Yeah, there's a lot of differences. And, regarding competition, I think competition, like friendly competition, is a healthy thing. Tinyman's built an incredible product, so I would never say anything bad about, what they've built. Nothing but good things. It's a great protocol they've made. But there's differences with what we've made. So for one, Algofi was written, the DEX was written in Teal, a newer version of the smart programming language for Algorand. So it was written in AVM 1.0. And so this enables, I think, enhanced security, because there's a lot less you have to keep track of inside of the smart contract, a lot less checks you have to do. And then it also increases user experience. It makes it much better. For instance, we can combine like the asset opt-in with your swap if you're getting a new asset you hadn't opted into before, because we introduced composability. So like that's one thing that makes for a better user experience on the front end. Nice. We also make it so that there's no residuals now, because of the previous version of AVM that Tinyman was written in. There was no way to dynamically compute the outputs, and so if you wanted to have slippage on the DEX, you were stuck with this awkward scenario where you always get residuals when you trade, and you have to go claim them afterwards. Because we are using inner transactions, we don't have any of that. So once you do a trade, you're done. So like one click, everything's done, it's handled. So I think from a UX perspective, Algofi is a lot simpler, a lot easier. We've also made a feature called Zap, which lets you go directly from a token into a liquidity pair, right? Whereas with Tinyman, you'd have to go do the trade in the token you wanted, figure out what the right ratio was, go and take them. It's a lot of extra work. Yeah.
Oh, that's cool. So I can basically, Zap. What a cool idea. So I can get I can have 5,000 algo, and then I can zap that into providing liquidity for whatever Yieldly.
Yeah.
Yeah,
we kind of solve the math, because there's a mathematical equation you can solve that tells you exactly how much algo of that 5,000 you want to trade for Yieldly. And then we, in a group transaction, combine on to the swap the add liquidity function. So you press one button, it goes and it'll trade. Okay, we have to trade 2,550 algo into Yieldly, or whatever the number it is. And then I take all of those outputs and go and provide them as liquidity. And now I just get the tokens. And if there's any opt-ins throughout there, it'll do it for you. So what might have been like literally 5 steps, right? Because like, okay, maybe I have to opt into Yieldly. I have to do the trade. I have to figure out the numbers for the pool. I have to do that trade. I have to opt into the LP token. Like it might take you 5 minutes. It takes you like 10 seconds with
that's awesome. Feature. And what are the fees like on Algofi's DEX?
That's a good question too. So one thing we did so 2 points. One, we have a low fee tier, which is 25 basis points or 0.25%. So that's actually for liquidity providers who use Algofi. They're going to earn the same rate they would on Tinyman, because Tinyman charges more. They charge 30 basis points or 0.3%, but 17.5% of that, or 5 basis points, goes to their treasury. So we don't, Algofi doesn't take any treasury fees, and we don't plan to the DAO will have to vote on that in like years from now. We don't plan on taking any treasury fees. So that's one difference. So basically traders can get a lower fee, while liquidity providers can get the same earnings. So it's kind of an incentive for people to come use the protocol. And then two, one thing we put a lot of work into that we thought was really important is we offer 2 fee tiers. So we offer a fee tier that's 3 times as expensive as the base fee tier. So that's 0.75%. And the reason for this is that if you think about different tokens, the fees you earn from trading need to get they need to be increased when the volatility increases, because as a liquidity provider, you're at greater risk if the token's more volatile, because you can actually lose money when you provide liquidity as the price moves around. And so if it's like Algo USDC, where Algo's, within the Algo ecosystem, Algo is not that volatile. You might put it into the 25, the 0.25% pool. Now, if it's something that's much more volatile, like say a new ASA that some team just made or something like that, you want to earn more trading fees if you're going to provide liquidity. So you put that into the high fee tier, and now you earn higher fees. So people are incentivized to provide liquidity onto these pairs where I think at the lower fee rate, they never honestly would be, unless someone like Yieldly or someone else comes along and inorganically incentivizes it. So I think it makes for a more sustainable ecosystem.
Got it. So yeah, so it's up to basically, for the newer stuff, you're incentivizing people to provide liquidity. So it's going to cost a little bit more to trade, like maybe in a zone pool or something, like a newer project that is all over the map. It would make more sense for the liquidity providers to earn more. That's a great idea. And that they don't do that on Tiny Man.
No, they don't have that feature. And it's more than that. It might actually save you money as a trader as well, because now that the fee's higher, people provide more liquidity. And so there's less slippage, right? Because the amount the price moves based on your trade is a function of the amount of liquidity. So if there's a lot more liquidity, then your trade is actually cheaper, maybe, despite the higher fee. So kind of everyone can win from a model like this.
Cool. So in that response, you also mentioned a DAO making these decisions in the future. How, where are you at with this DAO? And I think is it called the bank token? Is that the governance token? Yeah.
Yeah.
So your bank token is coming soon, or, what are some details around the bank token and the DAO?
So we initially planned on aggressively launching the token. It would have maybe already been near coming to market in our original roadmap. Mm-hmm. But things change. I think with the Tiny Man exploit at the turn of the year, it slowed down the growth of the ecosystem, and it made sense for us to rethink what we were trying to do as a project. And in some ways, for us as a project, I think it's good that we stopped and took a longer look at what we should do in a harder thought, because we realized that, look, what we really need to focus on today is building value as a protocol. And so we need to build the core essentials that DeFi needs. And spending a lot of time building governance and focusing on launching a token and all of what that entails is something that would really distract us from doing stuff like building the DEX we just built, or maybe some other ideas that we have that are going to be really value additive to the Algorand ecosystem. So I think likely we're waiting until Q3 this year to launch the bank token. And the reason we have to wait to launch it is because in order for us to launch a token, in order for it to not be a security, which would be very bad for the entire project and anyone who wants to own that token, it needs to have utility. It needs to be a utility token, and that's our aim and objective. In order for us to accomplish that, we need to have a full algorithmic DAO that will manage the protocol. And so the purpose of the token is going to be to manage the protocol. Now we have to build all that infrastructure in order for that to make sense. So we're really focused on, first, I think, getting a few more things that we think the ecosystem really needs and making sure our protocol is really robust and squared away. And we're kind of in parallel speccing out what the governance system looks like, building that. And we think that this might actually end up being like a kind of a public good for the Algorand ecosystem as well, because we're going to try to write it as something that's general and arbitrary that other projects could leverage. And then in Q3, I think, we launch both of those. And that's when bank would come to market.
That's cool, man. And is the idea that bank there'd be some sort of reward for being somebody that is on Algofi all year type of thing? Or is that going to be a completely separate thing? Is there going to, the people that are using it now, providing liquidity, all of that, is the idea to reward that type of usage in the future with the token? Or?
Yeah. So one thing is regarding rewards of that nature, can't really comment because again, similar line of reasoning to what I was getting at before. There's this thing called the Howie Test, and if you do something that implies work for value for no work, it could make something a security. So any project that advertises an airdrop is doing something risky. So regardless of whatever Algofi would or would not do, I wouldn't really comment on that. But my general mindset is the tokens need to get distributed to the users. So the part of the point of the token, the sole point of the tokens is the governance. And so part of how that gets distributed is through the protocol largely. and through people who've used it. So you can imagine, one thing I could say for sure is like once the token's launched, you look at what other protocols have done, and they typically distribute the tokens to users of the protocol. I mean, we would tend to follow a typical roadmap of what most decentralized projects have done, because I think that, you know, that's where the value is in getting that right. Because if it's not actually decentralized at the governance level, I think you've kind of failed at your objective of building a decentralized organization. So I think we would find smart ways to make sure that that was achieved.
Got it. Okay. So, okay, you mentioned when we spoke in Denver, you talked about it. I think we even talked about it, but you were kind of like, all right, well, we have this lending protocol is going great. We have all of this stuff already kind of in line. You know, Algorand could use a new DEX. We have some ideas, especially you built it on with the new version of Teal and all that. So there's a lot of advantages to it. And so it was kind of like, oh, and you just did it. And now you've launched it and now it works. And you had just mentioned, you know, maybe some of these other ideas that might pop up. You're like, oh, wait, Algorand needs this. Why don't we do that? Do you have any kind of teasers or any kind of like, what are some things that are on your mind that are next for Algofi?
Definitely. We have a lot of things we think about, but the big ones, the big ones that come to my mind are like, one, either at the next governance or the one after that, we plan to allow people to make like a personal vault that they can participate in governance with and use as collateral. So you could say, okay, I'm going to put aside this many algos. They're going to go into this vault. I can now borrow against it, and it's going to earn the governance rewards. So I think like this is a huge thing that the protocol needs, and we've always thought about it, but we couldn't accomplish it technically before. So that's like a pretty important one for us.
Right. So real quick before you move on from that. So that is kind of what I was alluding to earlier.
Yes.
And so basically we could all do this just on Algofi. So we could be like, all right, I've got 10,000 algo that I keep on staking in governance, right? So I can put that into, I can still participate in governance, and I just put it in a vault. And you guys will be like, all right, you can keep this 10,000 algo here for 3 months. Yes. And as long as everything works out, don't worry about it. You know, you can, do your 50% and take out 5,000 and be safe. Yeah.
Yeah.
Okay, cool. So that's obviously a great, I mean, that's an awesome next step. Yeah.
The protocol like definitely needs that. And, you know, without that, it's hard to really incentivize people to use Algofi. I think like, it's hard for us to compete with governance, right? It's just so much risk-free APR. So the fact that you could use it to participate in governance and then also use all the borrowing functionality, I think makes it into just such a better protocol. So we definitely plan on, I think,
and it just adds a ton of money, liquidity to the.
Oh yeah.
Yeah.
And I think it makes the dynamic super interesting, because now you have this thing, right, where there's going to be people who want to have liquidity on their algos. So the algo market will persist. It's going to be there. But there might be people who'll be like, okay, I'm going to borrow a bunch of algos before governance and put those into my vault too, because I want to, I'm going to leverage my algos to borrow more and participate in governance. So actually, it makes a very unique dynamic that I think will really enhance the efficiency of governance participation. So it's beyond that, you also have the stablecoin you can go mint, or USDC. So you can go do leverage yield farming while you're participating in governance. I think you get a lot of really nice functionality out of that, which is why, we've always been planning on doing that and are going to focus on getting that either for the next governance or the cycle after. Okay. And then I think the other thing we're thinking of is we have to talk with lawyers and understand the regulatory issue around this, but Algorand really needs a good token launch portal, like a good kind of DAO launch portal. And I think some people are thinking about building this, but it definitely fits in with what Algofi has been building. And so if there's a good regulatory framework in which we could build a decentralized token launch portal, I think we want to build that. And the idea there is like, you as a token creator, there's a menu of different ways in which you could launch your token, like, okay, Dutch auction, or different styles of like the tokens go out, we allocate for the auction or the sale or whatever, and people can come in and use whatever economic mechanism you pick to buy those tokens over some set interval. So, it could just be a fixed price. Like, I'm going to put aside 5% of my network. People can come buy it at like $150 million total valuation for the network. And as long as they provide the cash, they can buy it. And I think some things that we can do that are interesting is like, we can give people a discount if they're paying with stable, for example. So now we can incentivize use of the stablecoin we've been building and use it to boost the growth of the ecosystem. And then, maybe we can start to offer services on top of that too. Like, if you launch your token through the Algofi Launchpad, like, we'll help do the tooling around your DAO, because like we're very, very skilled smart contract developers, and like we're already building it anyways. So why not just help you plug that into your project you're building and make your life really easy? And I think you can think about like an entire pipeline of like people could launch their token through there. Once they've launched it, they're set up to get their DAO going, like they have that lined up. And then also maybe there's a deal where like they're going to fund staking contracts to help provide liquidity into the DEX right away. Like they're going to do various things that Algofi supports, and you can kind of do it all in one location. So I think it's a very compelling product. Now, again, the regulatory element is where it gets tricky, because I think that it's something that we don't see that much of. And so my thought is there must be a reason, and it might be really tough to do that in the right way. So, but that's the thing that I think we're just keen on potentially building. It's something we've been talking about as a team.
Well, because one thing that I notice, obviously being based in the States, is that I very infrequently can partake in any of these types of things because everybody's like, we don't know, and it's better we open ourselves up to risk if we allow U.S. investors.
Right.
But what sounds like what you would be building is something that you wouldn't even have to necessarily register for. It would be a decentralized type of thing where if it's there and it's offered, anybody can actually participate.
Right. And I think, the issue is like, how do you do that in a way where you're not doing something that would violate securities law? And like, that's where we have to talk to lawyers. And so like, I don't want to get people too excited. It's just like an idea that I think like, if we could, makes a ton of sense within what Algofi has been doing. And then like the idea is there's always more ideas, right? Because I think DeFi is an incredibly exciting space with all of these things that can be built. And in Algorand, there's like a wide open field to build them, in the sense that, there are other teams building things, but it's a bit challenging technically, and there's a bit of an entry barrier. And so the amount of teams entering and delivering good products, as we've noticed, has been maybe a little bit slower than we wanted. We think ultimately this will change, but in the interim, like one thing Algofi can do is just aggressively build things, because it's good for Algofi, I think, to get more and more products, but it's also it's one of these funny things where if we built the Launchpad I was just describing, that alone is an interesting product to build, but it benefits everything else we built, because like we need more projects, and now it's a way for more projects to easily get into the ecosystem. So it just like makes sense for us to just keep doubling down and expanding the amount of things that Algofi can do.
I'm really excited about Algofi, man. So you found, you see that there is a barrier here. It is difficult for somebody that is used to building on Ethereum to just come on over and start building on an Algorand. So there is a barrier, and there's a reason why, there's some struggle. And you just so happen to, I don't know, just be super bright. I don't know. And then you just can't, whatever. I'm sorry. I didn't mean to do that to you, but, but you just kind of, you came over, you figured it out, and now you're just comfortable with it. And that's the way it goes.
I was gonna say doggedly persistent. That's just like my trait. It's more like, I kind of was like, there's gotta be a way to build this stuff. It seems like pieces are there. You just have to put them together, and you just have to believe if you like put your head against the wall enough times, you're going to figure it all out. And then kind of now that we've done that a lot, it's really easy. We built the DEX in like 2 weeks, the team did. And they just cranked it out. And
okay. So when you say that, I wonder if people are like, we just kind of went through this tiny man exploit. Like, is everything secure? Did you learn things from Tiny Man? Is there, what do you say to people and be like, are we safe here? Like, is everything okay?
No, it's a good question, because like what I just said might inspire doubt, but I would say 2 weeks to write them like at an incredibly high level, because this is something that we had known. Someone who didn't know any teal, we did this with like as a part of our job interview process. They could write a DEX in a week. They could learn how to program in teal and write that DEX in about a week, but it wouldn't be production grade. And getting something to production grade is a huge part of the challenge, especially with smart contracts where you cannot have a vulnerability. So I would say that we feel very, very confident about the smart contracts. I think building a lending protocol was way harder than building the smart contracts, because with the current state of the AVM, building a cross-collateral lending market is very challenging. And I think, you might note that Folks Finance is a competitor that's coming to market, and they chose to do pairwise lending. And I guess I wasn't shocked to see that, because we know very well how hard it is to get global state awareness in a way that makes sense. And so we had learned a lot in building what we had already built. So the team, these engineers, like I was actually working on the product, so they're the ones who built the smart contracts. They're very, very smart, hardworking, great engineers, and they just crushed it. We've already gone through 5 weeks of audit with Runtime, and they haven't found anything nearing a material issue with the smart contracts. We're doing a second audit with NCC that's already underway. We wouldn't have launched a DEX unless we were incredibly confident in it. And I think that, as a team also, like so like 2 weeks to write it, and then we spent 4 weeks auditing it, right? Like we all did a very, very comprehensive personal audit, each one of us on the team. And I think, the odds of there being an issue is really quite low. And again, part of this goes back to the AVM 1.0, where you can take away a lot of these incredibly painful, hard to trace checks that you have to do. And again, it's because you can leverage inner transactions. And with the old AVM, you had to have this thing called like an escrow account. You had to have this very complicated group transaction structure that all fit together perfectly. And if you ever missed a single check anywhere across all of your functions, it would violate, the entire protocol. And that's kind of what happened with TinyMan, where they just have to check so many different things. Because of the old way in the early versions of AVM, it was very, very easy to make a mistake there. Actually, we wrote the lending market in the earlier versions of AVM, and I was always very uncomfortable with it. I was like, I can check everything 100 times, but like, how do I really reach very, very high confidence that I never miss anything? And it's tough. With the newer versions, it's just much easier because it's like there's a lot less things you have to check. It's all like it's the money comes back out programmatically instead of me having to interact with another contract and make sure that everything is what I think across this stack of transactions. So it's a long answer, but some insight if people are curious.
Yeah, for sure. I mean, look, this sounds everything you're saying, and it sounds like you're building the things that we need. And so this is like very, look, like you said, you look around and there are projects coming and very serious projects, but it's thin out there. So it's very comforting for me right now, especially when I'm maybe getting a little more conservative with how I'm deploying my capital because of the way the world is. Yeah. It's nice that Algofi exists, and I'm bullish on ALGO long term. So it's, it's a place where I can play it safe and still earn yield. So I appreciate that. I'm excited about it. And man, is there anything else that we missed? We talked about the token. We talked about what you have in the future. Is there anything else?
No, I guess just, thanks to the community for your patience as we've been building this. I think really overwhelmed with Algorand as an ecosystem. They really back the projects they believe in. And it's just been great to see so many people happy with what we've built. So thanks for that, I guess.
Yeah. Are you noticing a lot of people are using the DEX? Is there a lot of activity happening there? Yeah.
Yeah. And in general around the rewards and the launch of just all these new products, I was saying to John today, we haven't looked at the data, but I feel like there's been more discussion in the Discord in the last 3 days than the previous month and a half or something. You know what I mean? In the last 3 days, it's just been explosive, the response and activity, and it's really great to see. And it's exciting to see that, the rewards are getting people excited about this technology because, I guess one other comment is it is hard to build on Algorand, but they are building amazing tech, and I think it will get easier with the time to come. So, we just got to get some points on the board today. And I think we're all working to do that. Algofi, TinyMan, Yieldly, the various people who are entering the ecosystem. And I think it's just going to get more and more exciting as we go. So I'm just excited to see all that happen.
Are you guys going to get part of that $10 million that they're going to give people to build, developer tools to make it easier to build on Algorand? Are you angling for some of that money?
We have to stop and think about it. We've been so focused on this. I think there's only a month window to write a proposal there. So we'll have to see if there's anything that we can think of there.
Anything you think of? All right. I didn't mean to, suggest you put any more on your plate.
No. I like it.
Yeah.
No, we're kind of masochists over here. We just like to pile on more and more stuff. And
I like it. How big's your team?
So it's John and I, and then we have a number of engineers. So there's Matt, he's helping us with the product. Madoon, he's helping us with the product as well. Mm-hmm. And then we have Paul and Max, who are more on the smart contract side, on the back end side. And we have Armstrong, who has recently joined us. So that's the whole team. And they're all just really, really good engineers. And it's a pleasure working with all of them.
Cool. And the lending protocol, it launched in December, right? Am I right about that? It launched in December. And then the DEX was on Monday, a couple days ago.
That's right. Yeah, it feels like a lifetime ago, but yeah, I think it was Monday.
It was just Monday. And then soon you're going to have a way for me to use my governance tokens on Algofi, and everything is going to be fantastic. And Algorand is going to continue to grow, and it's going to reach number 3 and on CoinMarketCap, and we're all going to party on a yacht. You promise?
No,
you're like, I'm not going to promise. Yeah,
I can't ruin your dreams. I can't squash your dreams. I'm just gonna say no comment.
Okay, no comment. But maybe.
But maybe, yeah. I don't see why not.
Why not? I don't see why not. Yeah, why not? That's cool. All right, man. Thank you, Owen. Hopefully you'll come back on when other things happen and you want to talk about it.
Definitely. Thanks so much, Cooper. Really appreciate your time today. It's been great speaking.
Cool. Yeah, it's been really fun talking, man. All right.
Yeah. Bye.